Hi there, welcome to Grain TV. It's Monday, May 23rd, a mixed day in the grain markets. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn was off 3.5 cents a bushel. Beans, the big loser to the downside, losing 17 3/4, while wheat in Chicago was off 4 3/4. Let's start first with some overnight tender business. Israel is in the market for 100,000 metric tons of corn, and Taiwan is in the market for about 65,000 metric tons of corn. That certainly put a bid on the corn market to start the day. In beans, there was also some good news out of USDA's flash sales reporting system. Unknown destinations, in most likelihood China, bought 140,000 metric tons of new crop beans, and on old crop soybean oil there was also a deal done for 20,000 metric tons. But overall, the news in soybeans continues to be favorable weather in the U.S., a declining Brazilian real, and a market that's just wondering how much further up it can go in light of no real changes in the overlying supply and demand situation. We did see some cash interest today from soybean crushers. There were reports that some crushers were paying 10 to 15 cents over their posted price as margins have started to improve here a little bit. And so there seems to be at least some underlying demand there. Now let's take a look at Monday's export inspections report that came out from USDA. Here we got a disappointing number on soybeans coming in at only 77,000 metric tons versus 100 to 250 expected. Corn and wheat both coming in on the low side of expectations, but at least above the lower end. Now, if we look at year-to-date sales, here's where we're struggling, and especially in the case of corn and wheat. Corn year-to-date export inspections are almost 11% off of this time last year. Meanwhile, USDA is expecting only a 7% drop. Soybeans, a little better story here, off 7.8%. USDA has been ratcheting up their export expectations in light of problems in South America, so they're only looking for a 5.5% drop. But wheat, with only 2 weeks left in the marketing season on old crop wheat, we're just not going to meet those expectations by USDA. We are year-to-date 12% off of last year, and USDA only looking for about a 9% drop. That's probably going to add another 25 to 35 million bushels of carryout to next year's supply and demand situation. So that certainly is not something that is supportive of the wheat market. Let's switch our attention and talk about beans in this long-term bull market we've been on since May 1st, roughly. We have started to come into areas of support back before the May 10th crop report that got us sort of catapulting higher here. So today's action was pretty volatile. We actually managed to close off the lows, but it was certainly a down day overall, losing 16 cents a bushel. But as we look at this chart, what I'm really interested in is this area of congestion. We traded in that range for a good 5 or 6 days between $10 and $10.30 a bushel, which is around the upper end of where we're at now. We're closed around $10.35. So, keep in mind that $10 to $10.30 mark is probably going to be pretty stiff support going down if we are going to make a move down. But if we penetrate below that $10 mark, I'm worried that the next 70 cents down is going to go pretty quickly. There just wasn't much resistance as we climbed up in April, going from $9.30 to $10 fairly quickly. So I wouldn't expect there to be as much resistance going down. So right now the market is not sure where to go. We've certainly had a big run up, and we've certainly got this market at an elevated level, but overall the supply and demand situation isn't that dramatically different from where it was back in March when this rally started. We've got the Brazilian real that was off sharply today. Things in Brazil are still in an upheaval situation, so the US dollar as well is getting stronger, crude oil is getting weaker. All of these things are sort of stacking up against the bean market, and you got to wonder, can this bean market hold up with everything else sort of crumbling beneath its feet? If you are concerned about markets and getting some protection, we at GrainHedge can help you in your trading situation. By all means, visit us online at grainhedge.com to learn how you can take a demo of our futures trading platform and get our morning commentary and technical alerts every day. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by technical alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.